Hello, hello, hello. How's everybody doing out there today? Hope you're having a fantastic day out there. Wonderful, wonderful. Let's go ahead and grab those comments in there so I can see what you guys are chatting up about. All right, fantastic. Good, 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 good. Hey, Vu, how you doing? Morning, Brad. Well, I guess morning by you. Good afternoon by us here in New York. Andre, AJ, how you guys doing? Love Rob Roy. Appreciate that. Hey, Jim. Greetings, Battleground. Afternoon, Jeff. Fantastic. Appreciate you guys throwing all that in. Thank you, thank you, thank you. All right. Whew. Okay. What a day. What a week, man. What a week. You know, the topic I want to talk about today, because I've gotten a lot of questions from my own students on this, is we're looking at a very low VIX right now, and there's concern of the right type of trade for us to be focused on when it comes to options. And it does make a difference. If I'm trading in equity, the VIX doesn't affect the equity the same way that it really affects the options. It actually really has zero effect on the equity itself. Volatility will. Newsy type things will have effect on the price, but the VIX itself will, without a doubt, affect an option and how we trade the options price. So the first thing to understand is what the VIX is. The VIX is the volatility index, and that basically is the fear factor, is my name for it anyway, of the market, right? So when the market is going up, the VIX is going down. It is an inverse relationship between the two. Market goes up, VIX goes down. What happens when VIX goes down? When the VIX goes down, values of puts, the cost of put options, are dropping in price. Okay, so what does that mean? Well, if the stock price is going higher, the put prices are costing less. We're also seeing implied volatilities tend to drop, and we're seeing bid-ask spreads tighten back up to more normal ranges, where with an increase in implied volatility and or the VIX, you'll see that wider bid-ask spread in many cases on the options themselves. When the put options drop in value, the calls fall in line and they also drop in value. So remember, inverse relationship. If the market is crashing, what's the market? The S&P 500 is deemed to be the market. That's what the VIX is following. It's following 8 options on 8 stocks through the S&P 500. If the market is crashing, the VIX is going up. Bid-ask spreads are opening up. The volatility is increasing. The prices of the options are getting more expensive. Hence, So are the prices of not only the put options, but of the call options as well. So across the board, VIX will help to drive directionally how options prices move. Well, you've got to look at it at the market then and say, okay, if we have this large disparity between the options pricings, meaning if you've got a big move to the upside on the market or a big move to the downside on the market, and it dramatically affects the VIX, the fear factor, how do we go ahead and finalize or look at our trades? So if we look, let me shift over here to a chart of the VIX. All right, so we've got a chart of the VIX here. I'll bring it in a little bit tighter for you to see it. Actually, I'm going to bring it out a lot for you to see it, right? Very long picture, big. You can see all of this COVID garbage drove the VIX up here to almost 85 points. There's a line at 85.39, but that's this, 85.39, right? There's only been one time historically that VIX has been higher than that, and that is back here in 2008 with the market crash from the housing debacle. That was it right there. 89.53 was the highest. You'll see there are some blue boxes on the right side of my chart. There are some horizontal lines. These horizontal lines, I have spent a very long time analyzing VIX, fear, helping me to understand where the important levels are and where I can start making decisions to place certain types of trades. So if we go to zoom back in a little bit on this, and we go back pre-COVID. So let's go back to very early 2020, late 2019, right in here. Let me try to do this. Let's zoom in a little bit and let's bring this backwards. Right, we'll just scroll back. So here we are. So back before all the craziness happened, February, people starting to get sick, right? This VIX taking off was just craziness in the markets, right? Markets come crashing down, and we were sitting right before this at about 14.5. That's where the VIX was. We've had some numbers get us down for a while. We lived at this 1120 level down here on VIX, right? This is 1220 right here, 1120 down here. So we lived there for quite some time. And then, of course, with all the volatility that took place, and came driving things up right here. And that took us to the high. That 85 happened in the mid-March. And then things started to calm down as we got answers of what we thought was going to happen. People getting some jobs, getting relief from the government, all that good stuff, right? And we had hovered for a long time at this 21.5. And I was excited at 21.5. It actually gave me a good mix of all types of trades, which are selling strategy trades versus buying strategy trades. So it gave me a good mix between both of them. And then even as we came back down, right? We're in the 20, we go back to 20. We got our pops. That went up to 37. It only lasts normally 5 or 8 days. That's it. And we're back down at normal range again. Got a little bit of a pop. We came back down. And then very recently, the beginning of March, mid-March, we broke that 2145 level, and we moved, and let me zoom in on it. So we broke that 2145 level, which is right here. And then we started to live at this 1870 level. And over again, 1, 2, 3, 4, 5, 6 days. In about that 3-week period of time, we came right down to that 1870 level. And then it finally happened on April 1st, we broke through. And we've been following steadily. This is the 8-period moving average, exponential. But we've been following steadily down that moving average to where we're at 1630. Now, our next level is 1450. I'm not worried if it makes it to 1450 or not. And I'm not saying it's too low. What's happening here is this. If you are a buyer, meaning if you are buying a call option, buying a put option, your option prices are going to be very inexpensive in comparison to where they were when the VIX was up at 85. But if you're a seller, as a seller, I want to take in more premium, right? As a buyer, I want to pay less. So as a buyer, this is a great market for a buyer, whereas for a seller, the problem with being a seller here is we tend to get less premium. That doesn't mean across the board. Doesn't mean you cannot get enough premium. It just means that the premium you are going to receive will have a lower amount right now on most stocks that you tend to trade. Don't get me wrong. If you're selling a Booking, you're not going to notice a whole lot of problem if you're trying to sell Booking or Amazon, right? The numbers are going to be huge. What I'm saying is, in general, if you were trading a SeaWorld, you would have gotten more premium for it a few weeks ago than you would now for the same option with the same values to it, just because of the options pricing coming down and the bid-ask spreads tightening up. So I have a program where I do covered calls, naked puts, diagonals, right? I love all three of them. It's called Covered Call Explorer. That's my retirement account. Those three, write them down. Covered calls, naked puts, diagonal spreads. Those three make up my retirement account. Very heavily, you go back 5-6 months ago, diagonal spreads was my mainstay in there. Right now, naked puts is my mainstay inside of there, right? Because of the way the market has moved, the way the market's come down, the fear has come down, the market's gone up to all-time highs now, right? Even the NASDAQ's finally turning back around, and we're seeing some gains back again on the Amazons of the world. I mean, the Apples of the world, who took a bath in comparison to their price, right? They took a really nice hit to the downside. Good buying opportunities inside of there. All right, so I am looking today at more buying strategies than I am selling strategies. And if I am selling, I've shifted more so into naked puts and or credit spreads, which I taught last week here, right? Was anybody in last week's training when we went over credit spreads? Let me just see. Thank you, Had Mohammed. Pay close attention. If you want to be a great options trader, Rob Roy is a pro. I appreciate that. All right, so some of you were here last week. If you remember last week, we put on a trade on a credit spread. And that credit spread was on AMT, Applied Materials, right? And AMT. And we were looking at the 21st March 16 puts, 235, 237.50. We sold this last week and took in 60 cents of credit. Right? We did nothing with it. We just let AMT go, right? American Tower. We let AMT go all week long, and what happened? That option is worth nothing. Come the end of today, someone can make us buy this position right now at 237.5. How many of you would be okay if they made you buy the stock at 237.5 while it's trading at 248.04? 248.84, actually. I'd be tickled pink if that were the case, right? They're not going to do it. So this option expires worthless. See, it's a selling strategy. I took in a decent premium on it, 60 cents, which gave me about 25-28% rate of return for my position from last week. So I love selling positions, but you've got to be a little more cautious in this market right now because of what's happened with the VIX and the volatilities. All right, so let's see. Probably most of us. Good. Pete said no, but I'll be reviewing it. It was a good training, Pete, where we went through the diagonals themselves. Very good training. Let's see. Cool. All right. So let's go back and let's take a look at the market itself. And this is the S&P 500. Now, I've got to go out with it a little bit. See how much I can get away with here. All right. That's as tight as I can get it to keep it as big as possible on the screen. And we had this really nice move on the S&P 500. Great Fibonacci drawn in there. This wonderful pullback and bounce. Just love the pullback in there. And then we've been on a tear ever since this breakout with a vengeance on March 26th. We've been on an absolute tear. You see a black line at the top here that is at 41.81. I want you to write these numbers down. Write down, let me do it this way. Well, write down 41.81 since we're there. Right? Write down 33.82.50. And let me see if I can get to the third one this way. Don't worry about trying to read anything. 25.84. So 25.84, this black line way down here, That is a major Fibonacci level. That's critical to know. This 4181 is a major Fibonacci level, critical to know. The line in between, the 3382.50 level, that's the midpoint of those two, okay? So now watch. I'll scrunch it down just a little. We gapped up today, and we have run right into that 4181 level. We're just bumping our head on ugly. Ugly just means we're just seeing some hesitation, some resistance. It's not doing what we want, right? What we want is breakthrough, right? I'm not looking to take a bearish trade right now. I'm looking for more bullish moves. We're hesitating at that level. So that level, most traders don't even know it exists. It's stopping there because of human emotion. Most individuals do not know this number even matters. And you can run these same types of levels on the Dow, on the S&P, on the NASDAQ, on the RUT, on any major position that you trade. You can run an index that you trade off of. You can run these levels off of there. You could do them on individual equities. They don't seem to have as much importance there as they do on the actual stocks themselves. I mean, the indexes themselves, like we're looking at here, right? So we've run up into that level right now. We've got some hesitation. Are we going to get a breakout from there? Well, the answer is either yes, no, or maybe. I can't say yes. I believe we will. I don't know if it's Monday, if it's today. We could have a run into the close. I mean, we've got an hour and 45 minutes left. We could have a run right into the close, and that would be awesome, but probably not what's going to happen. I think with all of the running we did, right, Friday, Thursday, Wednesday, Tuesday, Monday. Monday was kind of a flat day. Tuesday was a good move up, and we rested on Wednesday. Thursday, gap and go. Wow. All-time highs, all-time closing highs. Wonderful. Friday is no different. We gapped up. We're up 8 points right now. We've given some back. Granted, we've given some back, and I'm okay with that. I would like to see, if I had my choice, if I could call the market maker and say, dude, this is what I need you to do. Get up above that black line. Close somewhere above that 4181 level. 4183, 4184, just slightly above there. And then Monday, see a retracement back to it and a bounce would make me extremely excited if I could get that kind of move. But obviously, I don't control the market like that. I got numbers on my phone, not the market maker who's going to make the S&P close where I want it to, though. I haven't found that guy's info yet. If anybody's got his digits, let me know. I will gladly call him. So on S&P 500, guys, that level is critical. If we do continue up, we've got another Fibonacci level at 4206.74, and 4200 is just the 100-point level. So that blue box is an area of confluence, right? That area of confluence that is inside of there is just a zone. It's two lines that are very close to each other, and we may stop at that lower line, the 4200. We may move all the way up to the higher one, 4206.74, or we may stop somewhere in between, right? Whatever it is, that zone gives us added strength. So that's telling me already, caution, grasshopper, right? We may run into this and hesitate. Doesn't mean we're not going any higher, but it's a ceiling, and we just are bumping our head on that ceiling right now. And then until we can get a clean break of it, there's a little bit of caution going on in there. All of that being said, to say directional trades right now are critical to me in comparison to when I say directional, in comparison to doing a selling strategy. I'm still doing some, but I'm doing more of the directional trades right now. Whether you are a swing trader or a day trader, either one works fine. We're finding that for the most part on our swing trades, we're doing not as well. Let me rephrase that. Until this move, we had not done as well on our swing trades as on our day trades. Our day trades have outproduced 40, no, not 40, a little over 20 to 1, 20 times better on our day trades than we did on our swing trades, right? But now in the last couple of weeks, and I'll share some with you guys of the trades themselves that we've done recently. Scooby said, Rob loves the Fibonacci. Can you explain how you apply it? Sure, Scooby, help me out. You talking about how we draw it or how I use it? I think you're referring to how we use it. Yeah, learning is continuous in the market, no question. Let's see. is causing the lights to flicker. Yeah, I don't know what's going on. I see something that looks like it's flickering. I don't know what the heck it is. So Scooby said, what levels do you choose your Fibonacci's, Rob? At all-time highs, all-time lows, what time frame? All right, everything we're looking at here is on a day chart. So it's a daily chart that we look at. But when we look on my intraday charts, and let's go here, we could easily draw on a 5-minute chart. We could easily draw a Fibonacci on our 5-minute charts as well. Or a 1-minute, or a 3-minute, or a 30-minute, it doesn't matter. A 4-hour, a 4-week, 4-month, 4-year. You could draw it on any chart that you use. But my daily charts are where I do all of my work. So Scooby-Doo, what I do is at night, and this started out, guys, I've been trading since 1997. I've been teaching others how to do it since 1999. At night, when my kids would be in bed, they're grown now, but when they would go to bed is when I'd sit down and do all my analysis, right? And I'd spend a couple hours at night finding candidates for potential setups for the next day. There were no filters. There were no scans. All of that was non-existent when I first started. Heck, computers were barely a thing at that point. And I'll tell you what, some of you old timers will get this. Some of you young folk may not. We used a 56K dial-up modem, all right? Just to give you an idea of how fast things really moved back then. So I do the analysis at night. So if I go ahead and pick a stock and let's say Goog, right? I normally trade Google, right? Let's do this. Let's go over to a template. I don't trade Goog usually. I do the Google. So I don't think we have any drawing tools in here, right? Let's see. Okay, so give me a second. I'm going to start a program up that will let me get some drawing tools here. Because it's always easier to see if I can draw on the chart than if I can't. So I'm going to pretend that I'm going to record this somewhere. Okay. Let's move that over. And I'll just keep starting and stopping the recording so I can use the drawing tools. Okay, let's try that again. I want to get rid of that crosshair on there. And you always want to draw on a chart that has no lines on it. Don't have moving averages, Bollinger Bands, nothing at all. And what we are looking for is a V bottom to a V top. And we're looking for that closest to the right side of the chart. I start back at about 7 or 8 months historically is where I start to look at. This has all been sideways. You got little hiccups in there. It doesn't mean a thing. You've got this V bottom in here and then a V top here. You have another V bottom and a great V top in here. Then we just kind of do this sideways thing. And I really wouldn't call this a V top yet. We're just kind of sideways rolling up. So I'm going to look to draw the fib from here to here. That's really where we want to focus on, right? So let's go ahead and snap those lines from this swing low up to the swing high. Now watch. As I move down, you'll see that the line will actually pull down into the top of the wick. Check this out. Boom. Watch. I'll do it again. And it just jumps down to that level. From there, we're going to stretch out the Fibonacci's. And this is the lines that we draw, Scooby-Doo, right? So now what I'm looking at is I'm looking at each of those lines is a support and or resistance level, right? So what does that mean? Well, if we go ahead and we switch this over to a template with moving averages, and this, ladies and gentlemen, is my main template right here, is the moving averages 8, 21, 55, pink, green, brown, right? Along with my chart, right? My Fibonacci's on my chart. Let me zoom in on this so we get a better picture of it. So what I'm looking for, Scooby-Doo, in an ideal world is I will have my moving average give me a confluence at, let's say, that 2283 level. And as we moved up above, came back and retest and bounced, that is where I would look to take the entry of the trade. I have here, I don't know if you guys can see it. My chicken scratch is pretty yucky to say the best, okay? But I write this out every single day. This was for yesterday. I don't have the one here today. I clean my area up so we get ready for the video. I don't have the one for today, but I write this out every single day looking for potential candidates to trade off of, right? I put down my targets. I put down what my entries are. A lot of our companies that we trade are earnings right now. As you see down here, we've got earnings, that E, right, are telling us. But we draw off of this. If the E right here tells me I can still trade it, but I can only do a day trade. That's all I could do on this is a day trade. And I'd be looking for moves taking place off of there. All right, let me just hit pause on that. All right, Scooby, I hope that helped. Sweet Life said, once you learn the points to draw the fibs from, they really work well for levels. You just have to figure out where to draw them from. And Sweet Life, you're right. There's so much more to them that most traders don't understand. You guys come check this show out every week at 2 o'clock. Follow along with the things that I do, guys. We do free trainings all the time. Actually, we've got candidates that we send out every week for free, right? I'll share the website with you guys in a little bit. But follow along with what I do, and I promise you, the things you will learn about fibs, there is no one that will teach you the stuff that I can about fibs. I have been learning them and still are. I'm still a student of Fibonacci since 1997, right? And I'm talking about it as my primary indicator. Sorry, the Brooklynese leaks out every once in a while. Since 1997. And I have been working with them hard and developed many techniques on how to trade them properly. Yeah, remember spreads with 16, 10, and 8s. No kidding, Voodoo, right? I loved it when you saw an option that was trading at $37 and $119,256 by $37 and 85 512ths. By the time you figured out what the heck it even meant, the price moved. Let's see. So Brad said, did you pick that fib on Google because it was just after a major consolidation period? No, we picked that fib on Google, and that was Cameron. Nope, not Cameron. Brad. We picked that fib on Google because it is the largest, write this down, the largest directional move closest to the right side of the chart. That's why we choose that one. It's the one that is the most prevalent of what we're doing. Now, don't get me wrong. If we look at Apple, right, you'll see there's a Fibonacci drawn on Apple. But watch this. There's a lot of Fibonacci's. Well, Apple did a split, so that's all kind of messed up there. So let's do Amazon. There's a lot of old Fibonacci's drawn on Amazon. See all those scrunched up lines? Right? I save every fib. There are rules of how and why we redraw the fibs. We won't get into them today, but there are reasons of the when and how to go about and redraw Fibonacci's. So that was the reason for it. All right, let's see. Scooby-Doo said, amazing, Rob. Thank you. I saw this yesterday morning, Benzinga, and made me want to love Fibonacci. Oh, okay. Oh, you saw me yesterday morning. Yeah, I was on with Harrison. It was a great show, man. He's trading fibs, and he's loving the stuff I shared with him, particularly keeping all your old fibs on there are very important. Webcoin said, I was never taught to fib. Okay, I get that. Amen. So Infinity 88, would you trade off of the 2050-200 or the 21-855? So Infinity Web, how about this? I'm a very big believer that if you're going to trade something, you should test it. And every one of you should do your own tests. I went back and I back tested moving average crossovers. So when one average crosses through another, I back tested 4.5 million days of back tests of moving average crosses using different levels. I was a 10 and 20 moving average guy. Why? Because that's what I was told I should use. Ironically enough, I had to switch TradeStation on my laptop to version 10 because the 9.5 wouldn't work with some of the software in our office. So I switched over and I added today a moving average cross on there, a 2-line moving average, and it did a 9 and an 18. And I asked the guy in my office, who uses 9 and 18? His name is Sean. And he said, I've never heard of it before. I said, I know. I said, why do you think they're 9 and 18? He goes, sounds like they just took one and doubled it. I said, that's exactly what they did, like a 10 and a 20. So I use an 8 and a 21. Now, if you're using 10 and 20, you will not notice much of a difference. But if you truly want to be harmonic in your numbers, you want to truly trade with nature, which is what I do, trading with human emotion, the 8 and 21 are a better moving average crossover. Now, don't get me wrong. If it was 13.7 and 52.9 were the best ones to trade, that's what I'd be using, regardless of them being fib numbers or not. So, and I don't use a 200, I use a 233. I don't use a 50, I use a 55. 55 and lower are exponential. Anything higher than that is a simple moving average. All right. Let's see. That clears up a lot. Cool. Hopefully, Pete, that answered about EMA and SMA. How do we get the suggested candidates? So, guys, and again, I'll mention this in a little bit, but if you go to Trade with Rob, if you guys could drop it in the chat, that would be great. TradeWithRob.com. I send out somewhere between 2 and 4, sometimes 5 a week of videos. And it's a short video. It's 3 to 5 minutes long. It's a short video showing you a candidate we're setting up, targets, stops, all of that. I mean, we did one on Baidu. Here, watch, check this one out. This one out on Baidu, right? And we took a bearish trade. It was somewhere in here. I don't remember the exact date, but you can see it. The video is still posted, right? It was somewhere in this range here. We took a bearish trade there, and our stop was up here at 2. So we took the trade at about 225. Our target was 209. We hit 209. So 209 to 225, 16 points. So that gave us about $11 or $12 profit on that trade. Our stop was set up here, right? That's what we're talking about. These are the types of trades that I send out, right? And they work extremely well, right? But I only send them out if I find a good trade. If I look today and I don't find something, and I look every day, if I don't find something, I don't send it out. So TradeWithRob.com, and you'll see it there, right? But Baidu has proved to be a phenomenal mover for us, right? As have some others just like it. Let's see. Jim said, why the odd numbers? Don't you want to trade with the herd? You see, Jim, that's the problem. The herd is not really trading the way that most people think they are. When you look at, I'll give you an example. There's a gentleman that I met at an event that I was teaching at. He was also an instructor there, and his name was Jim. I'll leave it at that. I won't say his last name because some may know who he is. And he was an options market maker in Boston, in the Boston Exchange for over 40 years. He had over 2 million documented options trades, and he'd already been trading for 10 or 15 years before they documented whose it was. And he's someone that in all of his trading has used 8 and 21 moving averages and Fibonacci's in his trades. We became very close at the company that I went to teach for them at that point. We became very close as far as friends because I knew exactly what he was referring to there and what he was doing, as did I, right? And it was trading harmonically, where the herd, they think it's going to fail somewhere or make it somewhere, but they're not really sure why. Normally, and here's what I'll say. Normally with my settings, I will be the person that when you're trying to buy, I will be the person that's selling to you. Have you ever seen this happen before? Watch, check this out. You go ahead and you enter a trade, right? And the stock closed right here, and you enter a trade, and the next day you get that little move, and you're like, yes, I'm right. It's moving in my direction. Then it kind of goes sideways a little bit, and then you get a little bit of a candle down. You're like, all right, no big deal. You know, stocks go up and down, and then you kind of get one of those, and you're like, okay. What do I do, right? I am normally the one selling it to you up there because I know harmonically where that fib line is, where most traders do not. I can tell you, depending on the Fibonacci strategy you use, the percentage chance you have of it actually working out based on, and again, none of it is subjective. Every bit of it is back testing. I do nothing on, well, I think this will, nope. Everything we do is based on testing, everything. All right, we're talking more on technicals than we are on options. Let's see. Siggy said, so, and of course, how do we access these materials that are they written materials? No, Siggy. So it's just tradewithrob.com. Go ahead, put in your email and name, and you'll get an email and or text if you want us to text it to you. Of when we put a new video out, you'll get an email that shows, hey, the video is posted. So Kyle said, Rob, what price range of stocks do you trade options are? Are they all over $100? The answer is no, they're not all over $100, but most of mine are. And that's my directional companies. Guys, I mean, I'm all about sharing, right? So I'll tell you why. Here it is. I don't know if I can make it any bigger. Screenshot it. I'll read them off to you if it makes it easier. Apple, Adobe, Amgen, Amazon, Baba, Booking, Chipotle, Facebook, Google, Home Depot, MasterCard, Netflix, NVIDIA, PANW, PayPal, Roku, Spiders, Tesla, United Healthcare, and WDay. On this list, the lowest price position on this list is Apple at $135. The next one is Baba at $230, all the way up to Amazon at $3,400. That's what I trade my normal day trades and swing trades. The trades that go on the once a 3, 4, 5 times a week are not these high price trades. That's not normally what it is. Now, when I say high price, that's relative, right? To someone, Amazon may not be expensive, where for someone else, it's like, okay, I could maybe afford one share if they would let me buy it over time, right? I can't buy a share of Amazon, and that's okay. You are where you are, and you start there. But I'm not trading the Amazons, the Bookings, and the Googles of the world, even the Chipotles of the world, on a regular basis on those trades that I send you guys, because I know many of you are not able to do those. So we stick with some of these. Here's Baidu, $200 stock, but I'm not trading the stock. I'm trading the option. So maybe for 20 bucks a share, so $2,000, I could get into a trade on Baidu, which is about what we spent when we did that trade. Let's see. There you go, Jim. Back tested. Go for it. Voodoo said, like Goldman Sachs, when they issue a buy, they're selling to you. When they issue a sell, they're buying to you. Trade with Goldman Sachs, not the herd. Yep. Monday expirations. Should I pay attention to open interest, for example, to SPY? So I only trade if I'm a buyer, Cameron. If you've not experienced a market maker dance, where you've gotten into a trade, there's no interest, and you're the only one, and you go to sell that one, you're going to dance with the market maker. Bigger spreads, they're not going to want to negotiate because they got you. They know you are it. No one else has an interest in that particular one. So open interest greater than 100 if I'm trading on anything directional. Sure, Derek Anderson. My site, wealthbuildershq.com. No worries. We'll show you. We'll drop a link in for you. Jen, I think you're in here. If you could drop in a link to tradewithrob.com, that would be great. There you go. Appreciate it, Spencer. Thank you. It's up on the screen there, so just jot it down. Ali said, Rob, in a general basis, you trade weekly options, monthly options, or daily ones. Like which sort of options do you mostly trade and why? Okay, so Ali, if I am day trading, I only trade weekly options. If I am SPY trading, and I'm trading the SPY, I only trade the option that's the closest expiration, because SPY has 3 expirations a week, Monday, Wednesday, Friday. I only trade that. If I am swing trading, meaning I have any intention of holding overnight, I go out at least 30, anywhere as far as 60 days, depending on how long I see the trade taking to get to my targets. All right, so here's a great example. Let me share with you guys, and here's a more expensive one, right? But let me share with you guys. Well, actually, let me do this one. Let's do Adobe. Was not expensive at all. Adobe cost me $16 a share, right? So we took a trade on Adobe here. Now, this is not a good spot. And when I say that, let me explain to you what I mean. Let me get rid of this. Make this a little bigger. All right, my entry came in on this day. Well, we put the order in overnight and it gapped. Couldn't be there in the morning. It gapped, and that's where we got filled, right? Our first exit, our first target was right up here at this level. So the same day we're out of half of our trade right there. We did 4 contracts on Adobe, right? We're out of half the trade right here. The next day we're out of 1 more of that contract. So now we're out of 3 contracts, right? And we still have 1 contract left as our runner. So understand, we got into this trade at 269.5, and it's now at 523. We still have open contract on this. This was I think we had about 45 days on this option when we traded it, right? this option, I don't want to scare you, so let me do it this way. This option had a $1,755 value on this trade, right? Based on entering the trade on March 31st. We exited on the 31st. We exited on the 1st. 2 contracts and then 1. So we still have 1 left. Right now, we have 1 contract left. Watch what happens to the number. I've got 1 contract left, and we had $1,755 of profit. If the stock right now is at 523, and this spreadsheet's got a way of calculating the cost in the background, that trade is worth $5,928. So from 2,000, it's almost 6,000. 1 contract is more money than the first 3 were in total. Now, we haven't closed it yet, so we're not there. That doesn't count. We're not there at this point. But this is a very low-cost option. So we paid $16 a share. So $4,800 to make $5,900. I would bet most of you are okay with that. Rob, I don't have $4,800. What if you had $1,600 and you did 1 contract? Well, $1,600 is too expensive. Then you find a lower price stock. Nothing should stop you from trading. There's plenty of trades out there that you can do. So Vu said, Rob, when the VIX is where it is at now, would you be a seller of PLBY or a buyer? So without knowing that company, I'd be looking at what's going on with the options, right? I would check a selling strategy as a covered call and see what kind of rate of return I could get. If I can get a decent rate of return, I like selling strategies because I have more than one way of being right. As a buyer, it has to go in my direction, either up or down. Let's see. Webcoin said sometimes the low price stocks offer good premiums for very low strikes. For example, ABQ is at $3. I wrote a boatload of longer term 250 puts for about 60 cents each. Risk was low, all paid. Yeah, and I'm not saying you can't trade them, but I trade Amazon. That's one of my favorite stocks to trade. The $3 companies, even on my covered calls, 8's kind of my low end of what I tend to do. My goal is 3 to 5% a month on covered calls. Let's see, where are we? Hey, I appreciate that, Happy Muhammad. Thank you. Can we get some likes? Oh, there you go, Sean. Cool. Like it up, guys. Come on now. Why not hold a contract longer? Sorry, Infinity88. I'm not sure what the question was to. I missed it when I don't know what I was talking about at that time. So smash the like. There we go. Really appreciate it. Would you buy Tesla calls right now? So it's not a matter of would I buy Tesla calls right now, right? It's a matter of what does the chart tell me to do? Right now, from a technical standpoint, and I'm going to stretch this out so I can see it a little bit better. From a technical standpoint, my 8 moving average is the highest moving average. My green is the lowest. I really want to see pink, which is the 8, then the green, then the brown. We're not in what I would call a true bullish bias. We're bullish, but we're not true bull. So if I graded it, true bull would be all 3 of them would be in the right order. Where they are now would be not true bull. It would just be bullish, but not true bull. So it would be a 2. A 3 would be if the moving averages were not even in this good of an order. That would be a 3. So the number 1 is going to give me the best opportunity to enter into the trade. And if we go ahead and bring it back to where it's more viewable, we're kind of sitting between the Fibonacci right now. I have no confluence. I've got a confluence at this fib line, but I'm waiting for Tesla to come back and retest and bounce. I am not, let me just say this as clear as I can. I am not the trader. I am not the trader that goes out there and tries to hit home runs. I don't. My job is to get on base a lot. There's a study that was done on 12,000 professional traders. You ready for the results? They found that the average trader made the majority of their money for the year on 20% of their trades. Of those 20% of their trades, they also found that in a trade, that when it went against them, they had either a very small cost or a break even possibly a small move in their side, in their direction if they scaled out. What they didn't have were large losses. And trying to swing for a fence is large loss potential. It's strikeouts, right? I'm not looking for the strikeout. I'm looking to get on base a lot. And every once in a while, I'm going to screw up and I'm going to hit a home run. But I'm just trying to get on base as often as I can. And if I can hit $2,000, $3,000, $1,200, $800, $4,500, boom, booking. There's booking. $21,000 on booking, and we still have half of the trade open. If I closed out the rest of booking right now, oops. All right. If I closed out the rest of booking right now, we're at 24.79. If we closed out 24.79 and we still have 2 contracts open right now, that $21,000 would be $47,000 on that trade right now. Boom! That is a home run. NVIDIA last week as a day trade, a home run. But Rob, how did you know it was going to go up that much? We didn't. We had absolutely no idea. I was thinking this might be a $2,000 trade. It exploded, right? Guys, this is the type of stuff that you want to learn from me. That's why coming back here every week is important. And that's why getting on that, getting that video that I teach, which is all about fibs, by the way. Everything I do in there is Fibonacci based. It's tradewithrob.com. It's up on the screen. Go there. Go check that out. All right. There's huge opportunity when you learn to be, what's the word I'm looking for? I don't want you to be haphazard in your trading. There's nothing wrong with taking a small portion of your portfolio and say, I'm going to chase that for crypto, or I'm going to go and trade doggy coin, or whatever the hell they're calling it now, Doge or Dodge or whatever it is, right? Which was named after somebody's dog, right? There's nothing wrong with doing that if you feel that way. Listen, one of the biggest things I ever did in the market was trade Bitcoin, and I had no idea what I did. I threw money at it and made huge profits on it from where it was to where I sold it. Had no idea what I did either time. There was no rhyme or reason to it. It just, someone told me to invest in it and I threw some cash at it. Opened a Coinbase account and set it up through there, right? Sold out of it when it was about $38,000, $39,000. Yep, I missed all the extra up run. I've got a little bit left, very tiny bit, but most of it went to cash, right? But take your monies and focus on, listen, we look for what are called clear and concise entries. I need a clear path. Here, let me do it this way. I need a clear path to my next resistance, which I have. 26.25 is my next target. The concise entry would be the bounce we had today off of the 24.50. That would have been the concise entry to take a trade today. If you're not in, you want to wait for it to come back to 24.50 and bounce. Oh, what if I get in now? Your stop still has to be down here somewhere at about 24.25. Long way to go at $50 of risk. Not worth it when you're trying to make $50. Not worth it at all. Okay. Did you put any stops on your Adobe trade? All the time. We set a stop, and then after the first target was hit, my stop was down here. My initial stop was down here because we expected to get in about here. My initial stop was down here. Once we got hit on that, my new stop was right about here where the horizontal line is. That's about where my stop was. Once we moved up to here, my new stop is a close below the 5 moving average, which is that blue line. So we're just going to let this one chugga, and keep going. We're not going to fight it. We're not going to take the money off. I'm not going to go, oh, but it's going down a little bit. I should get out. No, you shouldn't. Let it go. This could become a $600 stock the way Adobe is going right now. Why do I want to get in front of that freight train? Get out the way. Let it run. Let it do its thing. So Infinity 88 said, can you do this while working a full-time job? Infinity, if you knew my story, you wouldn't ask the question. And I know you probably don't, so I'm not complaining. But I was working 12 to 16-hour days running a manufacturing company. And that was Monday through Friday. Saturday was 8 hours. Sunday was a half a day at home with paperwork while I was trying to watch a football game with one daughter who I hardly had ever seen and another one just getting ready to be born. I did that and was able to, in just a couple of months, leave my job and trade the market and then start teaching a couple of years after that. So I started in 97 and I started teaching others how to trade, at least for another company. I'd been doing it right from when I started, but I started teaching for another company students back in 1999. And I've been doing it ever since. So yes, you can. Was it easier in 97? No question. I had a buddy of mine who's a naked put trader. Sells naked puts all the time. Still to this day does. He's my trading partner. Dude, did you put a stop in on the market? This is back in 1997. He goes, put a stop. Why I got to put a stop? Well, what if it goes down? He goes, don't worry, it'll go up tomorrow. And he was right. He absolutely was right until the crash came and you got caught on the wrong side of the trades and expiration date came and they had kept the market closed all the way through expiration date and you couldn't exit out of your positions. So either you got exercised or you went to zero because you couldn't manage the position. All right? Fun times. Fun time. It was a lot easier to trade when I first learned. It's harder today, which is why making sure you've got the right education model to learn this is important. What does your capital plan look like? And I don't mean do you have a lot of money. I have students that have done this with $500. Right? What does your capital plan look like? What is the trading system that you're using? Do you have a trading plan? Do you have your strategy documented on paper? Not in your head. No, I got it up here. My stop is up here. Good. Write it down. Write it down. If you know anything about human emotion, and especially if you are disadvantaged like I am by being male, women have a better brain function than men do when it comes to left and right brain connection. For us, we can do everyone, we can do one thing and one thing only. Left and right shuts. Women, there's a small gap in there and they can still communicate from one side to the other. Women make much better traders than men do. Just, if you're a guy, just get over it. Were all these trades shown in Wealth Builders HQ group before they were placed? Absolutely, T-Chess. Every single one of them was called out using this sheet. This is a private group that I work with of my students using this tracking sheet right here on a video where I tell them. So as an example, here, let's look. I don't know what's happened with it today. I didn't look. W day. All right. So, I did. I documented it actually for us. So on, I don't know if you could see it. It's going to be backwards, but on 4-5, right there, right? It was 4-4-5. So it says 4 for Thursday. So for yesterday, so I did this on Wednesday. On W day, the bottom candidate, I said bullish above, I can't read backwards, 261, A is aggressive, right? So we put an order in. So here, Thursday was what day? Thursday was yesterday, the 15th, right? So for the 15th, nope, wrong one. Sorry. This was previous trade that we did. As I said, I didn't remember if we had gotten it or not. So 261, so it was on 413, right? 261 was the entry, right? We had our stop would have been set down here. Our target is up here, right? This was the second stop. Once we hit our target, we moved our stop up and we're taken out. But every one of these, so we called this, if it got above 261 for Thursday, which would have been here. It got above 261 and we're stopped out right about 256. That's our stop out, about 255, 256. We're out of that trade. But it was called out on a video. So we took this trade from 261 to 268. We made about $1,000 on that first half, and the second half was a break even. This, we had 4 contracts go against us. We lost about 8, 9, maybe $1,100 on that trade. All right. But yes, every one of these were called out before we ever document the trade. None of them are set up without telling the students first what to do. Wow. Who just said I started in 97, 98 trading on the Daytech online platform. Holy mackerel. Oh, Vinay, I'm not saying anything wrong with selling naked puts. I was talking about not setting a stop was wrong. Yeah, get in touch with your feminine side. Exactly, Pete. Wearing a dress work. I don't know, Webcoin. It may. Possibly. All right. Let's see if I missed anything. Do I use Delta? Yes, absolutely, Alan. On an option, if I'm a directional trader, meaning I'm either doing a day trade or a swing trade, I am looking for 65 to 85 Delta, 100 open interest. And as I said before, if it's a day trade, it's as short of time as possible, the closest expiration. The closest I've ever done a trade to expiration is about 10 minutes to 4. I'm in New York. The market closes at 4 Eastern. 10 minutes to 4 on Apple, as Apple had a Bollinger Band pinch and started a breakout of that compression pattern it had. And it was 10 minutes to 4 that I entered the trade, right? If it's not a day trade and it's a swing trade, I'm going out at least 30 days, could be 45 to 60 days long. But I definitely am going further out on a swing trade. Now, all of that to say, Delta is 65 to 85, still close to 65. I don't want to go deep in the money if I don't have to. That's still work. That's still important. The 100 open interest is still important. So that happens no matter if I'm day trading or swing trading. And I can tell you on those 20 stocks I read off to you, I can tell you the price of every single one of my companies that I trade as a day trade, whether it's Monday, Tuesday, Wednesday, Thursday, or Friday. I can tell you the price of each of those candidates, not in my head. I've got a document that I've created for it. So I know how much I could expect to spend on that particular day. And it's all based on what the value of the VIX is. So Shawshank, SPY puts, we're in a very bullish mode right now. So unless you're day trading it, I'm certainly not long-term trading it. I'm actually selling covered calls against all of my SPY that I have in my retirement account. I've got covered calls written on it all the time. So Ray God said, how do you decide to put sale order on an option? Not sure what you mean by put sell. Do you mean to sell a put? So if you're bullish, you would sell puts or buy call options. So Bob Zola said, trading 4 contracts, 134, 139 vertical into announcement for Apple. Any chance it may work? Maybe another day we'll go into options pricing and how it works. So Apple doesn't get too crazy with the volatility change in there. I used to trade options that way, and it was called a chicken trade. It's a strangle is the true name of it. We call it chicken trade. Because you're chicken, you don't know which way it's going to go, so you're buying a call and a put, right? I don't want to bet on one side or the other, even on both sides. I will wait until after the announcement and trade it after, just because of how volatility works after an option, a company announces earnings. Do I ever buy back a covered call on expiration day and resell for the following week? I did it today, Pete. I do it every week. Every one of my positions I bought back. Unless it had earnings coming up, then I left it alone and I'll just buy a put on it next week as a protection. Other than that, I'm always rolling my contracts out again. How do you use the VIX to decide your trading plan? So, okay, VIX is not to decide my trading plan. It's to help me understand what types of strategies might work better. So right now, a lower VIX tells me directional trades as a buyer is going to give me better return than selling trades will, for what I look for what I'm expecting. Yeah, so a vertical call, are you seller or buyer, right? That if you're a buyer, great. If you're a buying strategy and you're paying for it, then yes. As a seller, you still can do them. You just have to be more cautious, just with how much premium you can get. Are my Trade with Rob videos posted on YouTube? No, they're not. They're hosted on our own website. All right, so Intel. I'm sorry, I saw it. Someone's asking about Intel. That's not it. So fib is drawn on Intel. Intel has shown higher highs and higher lows. I'd look for a move above the 65.98, a retest and a bounce, and I'd look for 69.5 as resistance on Intel. All right, cool. All right, so guys, there's a lot of opportunities in options. There really is. There's a tremendous opportunity in it. You know, the trades that I shared with you are an example or a sampling only, right? Because this year we're up $418,000 from January 1. All right, almost 419. All right, every single trade we do is not only documented, it's done in front of other traders. In other words, here. See, don't have March done yet. I haven't done it, just lazy. But here's our January and February's on what we've done. Right? So overall, 78% of our trades move in our direction are winners, 21% are losers. If you look at, you want to see March, I may have them done, just not documented there. February, March. Nope, I didn't finish it. I still have one more week left to document there, and I haven't done it. But up to this date, we had $37,000 for the month of March. Right? Not a great month when we had 116 here and 156 here, but I'll take it. I'll take it. All right. So if you have a high VIX, then you cover both directions instead of one direction. If I have a high VIX, I'm going to receive a better premium selling, but it also means it's going to cost me more money to buy SIGME. All right. And guys, these are just examples. I'm not telling you you're going to have these types of results. I mean, I'm trading since 1997, right? What I'm telling you is if you are willing to set aside what you think you know and let me teach you the right way to do it, I think you could see, I know you can see some amazing results. I see it in my inner circle and my mastermind groups. The students in there are doing phenomenal. They're just kicking tail. Absolutely kicking tail. All right. Yep. I'm here every Friday, 2 p.m. We'll start charging for it next week. No, kidding. Do you do live trainings every morning, Monday through Friday? Is it from your website or from YouTube or what time? So, Minnie, you'll find me noon on my own website on Monday. We do a live training. I have other coaches that are as good, if not better than I am, as traders that trade for our company, for Wealth Builders. And we have a training that we do on Friday at noon. I mean, there's a lot of stuff that we do. There's all kinds of free trainings. Check out the wealthbuildershq.com site. Listen, guys, to see all the free trainings, and then I'm going to let you guys go because I got my beautiful wife waiting inside for me. I don't know where it went. I had it open. I know what happened. I had it open and I had to reboot. So when you come into the website to wealthbuildershq.com, I got to log in. You're not going to see anything there. What I mean is you'll see the website, but you have to be registered to get inside. And if you do, come in and you'll see all of this green is free workshops, guys. That's free trainings we do all the time. All right. So check it out. But more importantly to me is go ahead and get the Trade with Rob stuff. You will not be disappointed with it. All right. Excellent. Guys, I think we're going to wrap it up at this point. Spencer, are you there?
I'm here. I've been here the whole time. Yeah, you've been fantastic as always.
Appreciate it.
Robert Roy, the link was up on the screen for a very long time. I'll throw it up again there. So I guess there's two links, right? There's this one, and then there's
tradewithrob.com.
Tradewithrob.com. Yeah.
And that one, they're going to get a free video 2, 3, 4, 5 days a week of trades that we're looking at as potential setups.
Got it. All right. Rob, we will talk to you next Friday.
Awesome.
We'll have an abbreviated show instead of a half hour. Instead of an hour, we're only going for a half hour. But that is quite all right. Have a great weekend, Rob. Thank you for all the trading analysis. And guys, smash the like button for Rob because that was freaking fantastic. And
appreciate it.
He doesn't have to do this. He does it because he likes to, because he wants to. And we appreciate that. And I hope you do. So smash the like. Thanks a lot, Rob.
Welcome. Take care, guys. See you all next week.
All right. I'm prepping. We're doing a gold versus Bitcoin debate in about a half hour. I'm going to go prep for that. And in the meantime, we're going to re-air this week's episode of First Trade featuring yours truly, myself. talking to a bunch of newbies about the market. So Rohan, go ahead and roll that, and I'll see you guys on the stream in a half hour for our Bitcoin versus gold debate.
What's going on, everyone, and welcome back to First Trade, your favorite show for beginner traders. Going to grow with you. We're going to take you on, literally episode 1 was my first trade, and each episode we bring on experts or people who know a little bit more than we do, and just try and learn and grow together. My name is Rohan. As I mentioned, I'm your resident noob. Michael over there in the room, he is your resident also noob. And that was the best line I could come up with. Sorry. But no, he's a little bit more experienced in the stock market than myself. And you might notice that we are coming to you from a different location. If you're a return viewer, we're usually up on the stage. And I can show you that kind of if I cut over to that. And
hey.
Wait.
Yeah, we're high tech.
Don't show our guest there, but there's a stage over there. That's a messy table. Wow. We're doing some rebuilding in the office. Okay. I'm going to cut away from that now. Anyway, folks, so like we mentioned, this is First Trade. Michael, how's it going? How are you doing today? What is going on? How has your week been since we last recorded?
Great, man. It's been quite the busy week. Summer temperatures. We've been doing good, staying busy. My portfolio's like just kind of sitting there like a dead fish. Like nothing is really happening with it at all, which is weird. Dude, I'm serious. It's deader than like our coworker that brought in a dead tuna fish carcass today to work. It's just not even moving. It's just sitting there.
So I haven't even looked at my portfolio, but we'll find out. We'll talk about that later in the show. I don't know. What else has been going on?
Oh, I mean, it's been busy. It rained today, like right after I washed my truck, which is so sweet. Can't wait to get outside and drive through all of the puddles on my way home. I might stay here till like 3 a.m. tonight, honestly, just to wait until it's dry. Because I hate doing that.
Why wouldn't you just stay here then? And also, you guys might have heard a soundboard. I'm sitting at my desk, so I have access to the soundboard, and I'm just gonna.
We should do this every week, just for the soundboard. Honestly,
I don't mind this. Like, folks, we need you to vote. Do you prefer our stage setup, or do you not mind us being in different rooms and having these setups? I kind of like this, a little bit more of a chill vibe, and just able to sit back and talk about our.
I like being further away from you. It's pretty cool.
Dang it, got one in before me. I usually always hit the Michael roast, and you know what? I missed it on this one, but Michael, I might be farther away from you, but I might be closer to your mom. I was waiting for. That was I was really trying, like I was trying to pull something out of nothing on that one.
Yeah. Listen, sometimes no joke is better than a bad joke. That's a piece of advice I received one time, and it can be very true. No soundboard sound. Wow.
I will reflect on that.
Let's move on. Let's move on to the next.
That's my shame from the last joke. All right. I've been rambling for a minute. Folks, what is today's episode about? Last week, we, of course, had Mike, the blind trader, on. Amazing story. Really enjoyed having him on. What a solid guy. He was so funny. Mike and I definitely had a good time with that one. And today, we're discussing something that is integral to your trading experience, integral to being involved with the stock market. A very important part of all this, and something you need to learn about. Mike, what are we talking about today?
Dude, we're gonna bring on a guest and talk about ETFs, what they are, learn a little bit more about the rundown of how they work, learn about some of the advantages, why they're a good part of a portfolio. It's kind of cool. I think this is probably like one of the more advanced concepts we've done so far. We've done a lot of really, really intro level stuff, and this one we're kind of breaking into one of those pieces of the portfolio that's important to have. So I'm psyched. I can't wait to go over it.
Yes, I am very much so looking forward to having some balance in my portfolio with my ETFs.
What, Torchlight is not enough for you?
No. But folks, when we're talking about ETFs, there's one person who needs to be on this show more so than anyone else. If it's not obvious to you already, if you're not a Benzinga follower, then, what are you doing? You should know who's coming on. He almost needs no introduction, but the face of a lot of Benzinga's shows, the tender nugget himself, Mr. Spencer Israel, will be joining us in just a few seconds here to talk about ETFs and just enlighten us with his knowledge. So I am quite excited for that.
Let's do it. Should we bring him on? Let's make it happen.
Yeah, let's get into it. It is about that time. He's here. Spencer's here from the command station. Usually Luke's standing there. Spencer, what's up?
How's it going, guys?
Spencer, one of the hardest working people at Benzinga, 100%. Dude is always here, always grinding. It's super impressive.
Spencer, why don't you give yourself a little bit of an introduction to the folks who don't know you?
Sure. So I am I've been at Benzinga for 5.5 years, which is pretty long for a company that's, I think, 9 or 10 years old. And in that time, just so everyone knows, I came to Benzinga knowing absolutely nothing about the markets, like nothing. I didn't know what an ETF was. I promise you, I didn't know what an ETF was when I joined Benzinga. And I've learned everything I know in the last 5.5 years, and have, just like everyone who learns about the markets, have naturally found my own path. Everyone sort of finds their own path, what they like, what they don't like. And I have found that I've been attracted to ETFs. I've sort of gone down that road, and that's what works for me, right? As an investor and as someone who follows markets, and that's what I've become passionate about. And now I used to be an editor, and now I just do streaming and YouTube all day, which is fun.
Nice.
Dope.
That's pretty sweet. Spencer, we have this one show. It's called First Trade, and on it, we have you.
Oh, is that this? Is that this?
That's this. That is this, in fact, just in case you didn't know. And we usually ask one question. We have to. Tell us a little bit about your first trade. Walk us through the details. If you remember the ticker, what was going through your head, and how did it wind out? How did it pan out?
Yeah. So, like I said, I joined Benzinga 5.5 years ago, knowing nothing. So my first trade happened when I worked here, not that long ago. My first trade, I want to say, it was like late 2016 or early 2017. The ticker was UAA, Under Armour. And there's an old Peter Lynch saying. Peter Lynch was a very famous mutual fund manager at Fidelity, and he said, invest in what you know. And I thought, great. I went to the University of Maryland, the flagship school for Under Armour, where the founder of Under Armour went. I know Under Armour. I like Under Armour. I got a lot of Under Armour stuff. I'm going to buy Under Armour. And I did. I bought it. I was eyeing it for like a very long time. And I bought it at what I thought was a nice rounding bottom. Let me get on the screen there. Rounding bottom. And what ended up happening is it just went down from there. And I tried to be hero, call bottom. It didn't work, but I was like, no, I'm convicted, man. I'm convicted. And I held that baby for a little over a year. And then I was like, this sucks. So so I sold it.
Should you go in?
Oh, very small amount. Very small amount. I want to say it was under $1,000. Let me put it that way. It was, I think, around 500, but I can't say for sure. And I remember buying it in like the mid 20s. I bought it in the mid 20s, and I sold at like, I think 19 or 18, and which, like, not terrible, but
that was awful.
That was my very first trade, and I didn't really like go into it thinking anything. I just thought, hey, this is a company that I know well, or at least I thought I did. And even if I lose money, which in this case I did, it's going to be a learning experience for me, and invest in what you know. And I thought, I know this one. I know this brand. I identify with it. So I'm just going to buy this one. And that's what I did.
All right. You're our resident in-house at Benzinga. You're the ETF expert. You have a show plug for the ETF show with Spencer Israel. Take us through how you got started with ETFs. What is an ETF? What's the background one? How did you kind of get into it?
Yeah, I don't really actually know how I got into it. Like I said, everyone sort of forges their own path with investing. I just sort of stumbled upon ETFs. So essentially, if you don't know what an ETF is, your parents and your grandparents, assuming you're younger, own mutual funds, most likely. If they're invested, they own mutual funds. ETFs are just a way more efficient thing, like mutual funds, but more efficient. Okay, so it's basically a security. It's an asset that holds a basket of other assets within it, and within the basket, those assets could be stocks, it could be commodities, it could really any asset. You can just make a basket of them and put that in this wrapper. They call it the ETF wrapper. That's like the regulatory structure of it that makes it unique. And these ETFs trade on exchanges. So ETF stands for Exchange Traded Fund. It is a fund that trades on an exchange, just like a stock does, right? So a mutual fund is a fund that is also a basket, but it doesn't trade on an exchange. They get priced once per day. At the end of the day, you get one price, and that's your price. ETFs are baskets, but they're trading throughout the day, just like stocks. Their price is going up and down constantly with the market. And that's what an ETF is. And they're amazing instruments. I don't know if I can just keep going. 5 main reasons why ETFs are awesome, right? Especially when you compare it to mutual funds. All right. Number one, as I said, they're baskets of things, meaning they're diversified, right? That's why I like them, because I realized at some point, maybe it was with Under Armour or maybe not, but I realized that I'm not ever going to put in the amount of time it takes to do the kind of research to pick like the best stocks. I'm just not. If I do it, it's because I got lucky, right? I just know that I don't have those deep like value investing skills like Roaring Kitty. You know what I mean? I'm not going to spend hours going through filings, reading financial statements to find the best companies. I'm just not going to do it. So I don't want to put all my eggs in one basket, and I will buy a literal basket of stocks. That's so diversified. That's the big thing. Number two, I mentioned they're actively traded. They're actively quoted throughout the day, as opposed to mutual funds where you kind of, you get one price and that's kind of it. Number three, they are tax efficient. So in a mutual fund, which is what most people own in their retirement accounts, it's a pool that's managed by a manager. And every time that manager does something, buys or sells, that's a taxable event that gets passed down to you, the fund owner, if you own a piece of the fund. The taxable events get triggered, and you will owe capital gains whenever there's a transaction within the fund. ETFs don't have that problem, again, because they trade on an exchange. It's kind of in a weird derivative type way. So you don't get taxed whenever the people running the fund decide to buy or sell stuff in the fund, or really sell. You don't get taxed. That doesn't happen to you. So they're more tax efficient. So that's number three. Number four, they're usually very transparent. There's a corner of the ETF market that's relatively new that is not transparent intentionally, but by and large, ETFs are transparent. You can see what they hold all the time. They rebalance, generally speaking, pretty frequently, and you can always see, it's not secretive. And the last thing is they have low fees. Usually, not all of them, but usually, right? Most ETFs are pretty cheap on the fee front, right? Mutual funds can have several types of fees, with like a management fee or a load fee, right? And mutual funds have gotten this rep for having a lot of fees. Not every mutual fund, some of them are low fees, but historically mutual funds have charged higher fees. ETFs have historically charged very, very, very low fees. There's actually like a fee war happening right now, where there's like a race where like who can charge the lowest fees possible. So you're getting exposure to a lot of stuff and not getting charged a lot of fees while you're at it. So those are the 5 reasons why I like ETFs.
I have one like tiny question I had inside of all that. So you mentioned that smaller corner of the market where the ETFs are not transparent, or there's a section that are not. What would be the reasoning for some of them that aren't?
So it's a pretty new. They're called active non-transparent, or ANTs. Basically, and this is really new, like in the last year, I think. And essentially, the theory is there are people out there that want access to like hedge fund type strategies, and they're willing to pay for it. And so there are issuers that have said, okay, we will provide this to the market. We will essentially put out an ETF that kind of operates in the same way as a hedge fund. We're not going to talk about our strategy. We're not going to disclose stuff. It's not going to be transparent. And we're doing that so everyone else can't see what we're doing, which is basically in the style of a hedge fund, right?
Interesting.
So for some people that want that sort of thing, it's out there. And that's the thing about ETFs, is there is an ETF for almost anything, right? Not Bitcoin yet, but there will be soon. But there is an ETF.
I heard there was one
in Canada. In Canada, there is.
Correct.
Yeah. There is an ETF for any type of asset, any type of strategy, any type of theme. There's thousands and thousands and thousands of ETFs out there, all doing different things. Well, not all of them. Some of them are pretty similar, but it blows your mind how many there are. And so that's another great thing, is you can get access to pretty much any kind of trade, any kind of asset or strategy that you want access to via an ETF, because there's just so many of them out there. Yeah.
I actually have a couple questions for you.
Yeah.
A little bit off script here. Okay, so you mentioned any type of asset. Does that include bonds as well?
Yeah. Bonds, anything. Stocks, bonds, currencies, commodities, VIX. There's ETFs based off the VIX. There's an ETF for almost
what's
anything.
that?
The volatility index. It's a whole
Okay,
thing.
cool.
Yeah.
Yeah.
This is the first trade show. We're very based
Sorry,
on.
you're right. I'm sorry. The point is there is an ETF for almost any type of asset aside from Bitcoin. Yeah.
So why would you go the route of like, so mutual funds? I totally get the difference. Mutual fund versus ETF. In my opinion, I do agree that an ETF is much better than mutual fund. What about index fund, right?
This industry is confusing. This industry loves having multiple names for the same thing. An index fund is just a generic term for a fund that tracks an index. A lot of ETFs are index funds. A lot of mutual funds are also index funds. It is just a generic term. It doesn't apply to any one type of thing. It is just an umbrella term. A lot of people use index funds and ETFs interchangeably. Even though a lot of ETFs don't track indexes, a lot of them do. There are a lot of ETFs that are also index funds. SPY, the largest ETF out there, the first ETF out there, is an index fund. It tracks the S&P 500. It tracks an index. It is an index fund. The second index fund, the QQQ, which tracks the NASDAQ 100 index, that's an index fund, right? So index funds, it's a weird umbrella term. It can be used to apply to it can apply to many ETFs out there. So your question about why ETFs not index funds, they're the same thing a lot of the time. Okay, so think of an index fund as just a type of ETF or mutual fund in this case. Index funds is an umbrella term.
I know. Yeah, when you start talking about target date funds, that's like more specific.
Okay, target date funds. The target date funds are just funds that will automatically rebalance as you get older. A target date fund is, if we're talking about like layers here, a target date fund is like it's more zoomed out. A target date fund will own different funds within it, stock funds, bond funds, and it'll rebalance as you get older to account for your age and your risk. Target date fund is great for people who really don't know anything and don't want to know anything, right? If you're trying to save for your retirement, say you're going to you retire in 2060, buy a 2060 target date fund. It'll take care of all that stuff for you. You don't even got to worry about it. It's kind of like set it and forget it. And within that fund, it will hold ETFs, mutual funds, bonds, whatever, and it'll change automatically. So it's really like an autopilot type of situation.
Nice.
Okay.
Yeah.
And then I guess like even within the ETFs, right? If you're talking about like ones that follow indexes versus one that carry baskets of securities, I guess it's just like up to preference, right? Like, are you more towards you want to invest in very specific things, or are you just trying to like follow an index?
So the entire ETF industry can be divided into two, right? There's two types of ETFs. There's active and there's passive, right? Passive funds are index funds. Passive funds are on autopilot. Passive funds will track an index. An index is just any measurement we use, any group of stocks or whatever that we use to track the market. The S&P 500 is an index. The Dow Jones is an index. The NASDAQ is an index and also an exchange. And so passive ETFs are rules-based and will attempt merely to mimic the performance, to copy the performance of whatever the index does. So if you have an ETF that tracks the S&P 500, index goes up, ETF goes up. It's that simple. It is not trying to hit a home run. It's trying to hit a single every time. It means you probably won't strike out, but you're not going to hit a home run either with a passive ETF or passive fund. Active funds don't track an index. They are picking stocks that they think will outperform. The goal is to outperform the overall market. Passive fund the goal is to be the market. Whatever the market does, you're going to do with like a generic passive fund like SPY. You are the market. Passive funds are the market. Active funds are trying to beat the market. They don't always succeed. Active funds, it's really, really hard to beat the market over a long period of time. Warren Buffett has done a series of very famous bets with hedge fund managers saying, I bet you cannot beat the S&P 500 over the next decade. And he's won every time, right? It is just really, really hard to beat the S&P 500. Most people will end up owning passive funds, and that is perfectly fine. That's what I own.
Well, let's talk about, I guess, length of holding it then? I mean, what's the
Yeah.
ideal strategy if you're talking about ETFs, passive or active? I mean, how long do you want to hold one, and when do you know
So-
when to get out, when to get started?
You can hold an ETF however long you want to hold an ETF, right? There are no rules. The thing I like most about ETFs, in addition to the transparency and the efficiency and the tax stuff and all that stuff, is they just make investing in seemingly complex things easy, right? They will give you exposure to an entire sector of the market or a specific strategy. And rather than you, like, let's say Michael says, oh, I want like a momentum strategy. I only want to own momentum stocks. Michael has to go and find those stocks and do the research. Or he can just find a momentum ETF that does it for him. You make one transaction or you make 20 transactions.
Yeah, so you're just simplifying.
You're just simplifying it. And
Right,
that goes
right.
for anything. So that's why I like ETFs is, let's say, oh, you decide I'm really bullish e-commerce. I just think e-commerce is the greatest thing ever. It's going to be the future. I want to own a piece of e-commerce. Well, you could go and buy a bunch of e-commerce stocks. You can go and buy an Amazon, an Etsy, whatever. There's no way to know which company is going to be like the biggest winner. Or you could just buy an ETF that holds all the e-commerce stocks. As long as you're right and e-commerce becomes more of a thing, then you're going to win, as opposed to being right about e-commerce but picking the wrong company. That sucks. With all that being said, your question was how long to hold an ETF. It's whatever works for you, right? You need to understand like what kind of a investor or a trader you want to be. I'm pretty buy and hold, right? Which means that I buy ETFs for the purpose of holding them for a while. All right. I haven't sold an ETF ever, actually. And I make them a part of my overall portfolio. So for example, my main portfolio that I have, I don't even know how many. I've got like 15 things in it. But 2 of those things make up 60%. The other 40% is all the rest of it, is like the other 13 things. So those other 13 things are like smaller bets that I'm making. That I'm making a bet on 5G. I'm making a bet on cannabis. I'm making a bet on esports. Okay. And those are all, I think of it like a planet in the satellites. Okay. The planet in my portfolio is 2 ETFs. It's VOO, which is the Vanguard S&P 500 fund, and VEU, which is the Vanguard International Fund. Okay. And those 2 things are 60%. And then 40% is split up pretty evenly amongst my esports fund, my 5G fund. I own an ARK fund as well. I own ARKW. I own a biotech fund, IBB, right? And those are all like satellites surrounding my planet of my two largest holdings, right? So I'm gonna pretty much do what the market does because I'm so concentrated on an S&P 500 fund. But the goal there is, well, if I'm right and esports and biotech and this ARK fund that I own and all these, frankly, tech-focused funds outperform, then that's going to help me outperform. But I'm still pretty diversified. So that's the point. Is you're really there's no rule. How long do you own an ETF? That's not the right question to ask. The question to ask is, what do you want to own and how long do you want to own it? And then and then figure it out from there.
Do you have a favorite? Like, what's your favorite ETF?
I should probably answer the one that I own that's my largest holding, which is VOO, right? VOO, which is the exact same thing as SPY, just from a different company. And the fee may be a little bit smaller, but they do the same exact thing. And as I said, it's 60% of my portfolio. And it's the S&P 500. It's diversified. It's basic. I'm not going to hit a home run, but I'm also not going to strike out. And if I do strike out, then we all have bigger problems, quite frankly. Favorite ETF ticker is I'm biased towards verbs. I love ETF tickers that are also verbs. So I'm going to say MOO, MOO, which is the agriculture ETF.
Spencer, if you could make a ticker for an ETF, what would it be and what would be?
Oh, there's the question. There it is. Wait, let me guess. Let me guess. Is it going to be something like food oriented?
I resent the implication.
No, because you're like the cooking guy. Like you are always the gourmet food. That's you're like the dude.
Rohan, I think you may have stopped me. That's a really good question. A verb would be nice. Maybe like poo. I don't know. POO.
It could be like the feces industry.
Wow. It could give you exposure to like waste, right? Waste management, which is a public company, right? Yeah. Garbage. It could give you exposure to garbage and utilities companies. I don't know. Maybe someone make that ETF.
Well, listen, I learned a ton about ETFs. I mean, I'm probably going to buy some more because I mostly held single stocks, but ETFs.
The thing is, like, look into it. The thing is, if you have an idea about like a thing that could be cool, could be cool long-term investment, see if there's an ETF for it. Like, check it out. There probably is. Chances are, if you've thought of it, so is somebody else. Like, if you think,
is there an ETF for NFTs?
No, there are no. The only ETF, to my knowledge, that has pure exposure to blockchain at all is BLOK. That block. That's
Canada, right?
No, that's in the US.
Oh, really? Okay.
Yeah,
just
block.
Exposure to block. Okay.
Yeah,
gotcha.
But there are no NFT. There are no cryptocurrency ETFs in the US yet. There will be. There will be soon. Maybe, hopefully this year. There will probably be several of them, but there are no Bitcoin specific or crypto specific ETFs. The SEC is sort of trying to figure out how that would work right now.
Gotcha.
Ticker coin.
Nope, can't do that. Already taken.
Taken. Damn.
Coinbase IPO next week or this week.
What I wanted to say is, because you mentioned, like, look into it. You might, if you want to invest in a certain industry.
Yeah.
We've had a couple guests come on here previously and talk about investing in secular growth trends, and basically saying what they try to do as a value investor or just as an investor in general is pick an industry that they like really believe in, that they think is going to do well, and also find the best company doing that, right? And I feel like the ETF version of that is you don't have to find the best one.
Exactly. I'm saying you're not gonna find the best one. That's what I'm saying. I'm saying you might find like a cool new growth industry, but you're probably not gonna find the best stock. That's like harsh, but that's the truth. The vast majority of investors are just not going to be able to find the best one. Amazons don't come around every year, right? Every decade. They just don't. And if you do find the best one, congratulations. You also may have gotten a little bit lucky. Maybe you did some great research, and congratulations for you. For most people who are not going to put in that time, don't have to find the best stock. Just find all of the stocks, right? All of them. Own all of them is my point.
Own all the stocks.
Own all the stocks.
Spencer is right.
There is an ETF that owns every single stock. It's the total market ETF.
That's pretty sick.
It'll give you every single stock.
Spencer Israel, ladies and gentlemen. Spencer, loved having you on. It's kind of, it's nice to have you on for a change versus you being on right before first trade and then right after.
Yeah.
Guessing with me.
I gotta say, it's hot. It's hot.
All right, folks, this is a little bit of a surprise. Sorry to interrupt the broadcast here. That was coming to a close, but we have the gold versus Bitcoin debate going live right now. So hold on tight. Sorry to cut off first trade. You can always find that in the description on our YouTube channel, and of course Wednesdays at 3 p.m. But folks, it is time for Bitcoin versus gold. So hang on, I'm going to end this broadcast and send you guys right over there to Spencer Israel and the crew.